What's going on, and welcome back to the Boring Money Show. It's your host, Mr. Boring Money, here to help you stay calm, print money, and live life on your terms. Now, cue the disclaimer. Now, what I want to do is clearly communicate that this is not financial advice by any means whatsoever. All I'm doing is sharing what's worked for me, some of the investment principles that I've learned over the years, and this is for pure entertainment purposes. If you're seeking financial advice, or if you have issues with your own portfolio, seek a financial advisor, somebody who's licensed and who's qualified to be able to meet you at your unique needs. This is just for educational purposes and entertainment purposes only. In today's episode, we're actually going to be discussing the 5 common mistakes that I made as an early investor, and I want to ultimately help you avoid making those same mistakes. Now that the disclaimer and the legalese has all been out of the way, I want to talk about why this is important. Because investing can be a great way to grow your wealth and prepare for your financial future. However, I want to communicate the mistakes that I made that I find to be common for a lot of people starting out early on that can really jeopardize your investments. So the first mistakes that I made was not having a plan. Early in 2019, 2020, when I was starting to think about investing, I didn't have a plan. I was just putting money into stocks, putting money here, and just no real strategy for how I wanted to go about doing that. Now, starting anything without a plan is like going to the middle of a desert without a GPS and without any kind of navigation and expecting to find your way out of it. It doesn't make any sense. Right? It's important to have a clear investment strategy and goals in place before you start investing. This can help guide your decisions and keep you on track. Your investments should take into account your financial goals, your risk tolerance, and your time horizon. For me, because I didn't have these things, I was reckless with how I went about deploying capital and trying to build my portfolio. Right. It's also a good idea to update your investment plan regularly as your circumstances and goals will change. Right. If you don't have a plan for where you are allocating your money will go to someone else and help them reach their goals, not your own. Right. I want to repeat that. If you don't have a plan for where you're allocating your money's going to go towards helping somebody else reach their goals. Right. And I didn't understand this. And because I didn't understand this, I was spending money on things that I didn't need. And I wasn't taking time to properly calculate if this was a good decision or not. Now that I have a plan, right, we have our 3 milestones that we talked about before. All right. We have a freedom milestone, our FU money milestone, and our legacy wealth milestone. Right. I know what I need to close in on my freedom milestone. And I hit that freedom milestone in 2021. All right. I was able to hit that freedom milestone and set myself up to be able to retire because I had a plan for what I wanted to do and what I needed to close in on that goal. Because I had a clear investment plan, whenever we're considering making a big purchase, I was able to go, all right, well, this purchase is going to be $5,000. Well, right now I'm earning getting a 57% cash on cash return. If I was to take that $5,000 and deploy it on the blockchain to get my return, that's actually going to cost me $8,000 if I do that. All right. Versus now I can make those decisions and weigh it against the plan that I have in place. When you don't have a plan in place, you can't make those critical types of decisions. You can't pause and truly assess if this is the right decision for you. All right. Mistake number 2 was trying to diversify my portfolio too early, right? Diversification is key to minimizing your risk in your investment, but trying to diversify too early into too many different verticals will reduce your return. I know this is contrary to conventional wisdom, but I want you to hear me out here. Warren Buffett said diversification is a hedge against ignorance. So if you want to maximize your return, commit to learning one asset class. All right. And I studied lots of different billionaires. None of them tried to diversify early on. They all went in on one thing and were laser focused on just one thing, right? And a lot of people hear, oh, you want as many streams of income as possible. Diversification is key. No, it's not. If you're ignorant and you're not willing to learn, then diversification is key because it's a hedge against your ignorance. So for me, I identified the blockchain as the asset class that I wanted to learn. So I went all in on learning how to deploy capital on the blockchain, how to produce cash flow, and how to build a digital real estate portfolio of cash flowing assets on the blockchain. I just went all in on that. And in doing so, it made everything else that I needed to do so clear. As I built my knowledge base on the blockchain, I started to get a better understanding what looked to be a high risk investment for the person who was ignorant, for me, was extremely safe because it was a reflection of my depth of knowledge. I knew how to navigate the space. I know how to analyze the risk. I know how to run the numbers. I know how to do the math. I know how to read the smart contract. I know how to analyze the opportunity and all these different things. So for me, it's no risk at all. For somebody else who doesn't know, it's high risk, right? What's going on? I wanted to take this time to quickly interrupt this video or this podcast. If you found this helpful and you're interested in getting started investing on the blockchain, we have an incredible program called the Boring Money System inside of our Wealth Sanctum. What we do is we'll guarantee you'll produce cash flow within the first 30 days of setting up your first digital cash flowing real estate on the blockchain, or you don't pay. So if you're interested in that, there'll be a link somewhere in the show notes for you to be able to apply and schedule a free strategy session where we can look at your portfolio, look at your financials, and figure out what would be the best and most efficient way to deploy capital on the blockchain to guarantee cash flow. Hope to see you on the inside. Back to the show. So understanding that diversification is key later on is what helped me understand this, because I was trying to diversify. I'm like, I'm going to go into a little into stocks. I'm going to go a little into bonds. I'm going to make sure I allocate a little bit into the blockchain, but then I'm also going to have a little bit on central exchanges. And when I decided to kind of clear all that clutter and was like, I'm just going to go in on learning this one asset class, all my money is going to go into here. People called me reckless for doing that. But now we have a decent sized portfolio, produces passive income that covers our cost of living. And that same passive income that we're producing is being used to acquire other assets like real estate. That same passive income is what's being used to acquire interest in different businesses that cash flow. All right, it's because I went all in on one asset class first, increased my depth of knowledge to a point where it's producing sizable enough return to now that using the cash flow that one asset class produces, I can start diversifying, taking that cash flow and allocating it into other places that are safe and that I can diversify because I'm ignorant of those different types of assets. So I can just spread money there because I don't care to learn about it. So I know it's contrary to popular belief, but believe me, go all in on learning one type of asset class, deploy your capital there, get to a point where it's producing cash flow. And then with the cash flow, you can start to gamble and test and diversify into other asset classes. All right. So quick recap. Number one for me was not having a clear investment plan. Number two was diversifying too early. All right. And number three is chasing high returns. It can be tempting to chase after high return or high investment returns, but these can often come with higher risk. It's important to consider the risk return trade-off and to be realistic about your expectations. All right. This kind of falls in off the back of item mistake number one, not having an investment plan, but then three, chasing high return and getting greedy. So I had a plan and things were going according to plan, too well according to plan. And I had gotten almost a 200x return on a project that I got into on the blockchain, right? And I had surpassed the initial goal that I needed for mile number two, but I got greedy and continued to chase the high returns, gave into the euphoria, and got wrecked because of it. So I spent a lot of sleepless nights watching the charts. Right. and I lost a lot of money chasing the high returns. So now for me, that was a very good lesson, because now I bias cash flow. I'm like, I don't care if I'm getting 100x return on this. So long as it's producing consistent cash flow, that's all that matters. And now I get to manage my portfolio based on the lifestyle that I want. I'm not looking at charts. I'm not analyzing charts. I'm not reading chart like trend lines or anything like that. I'm looking at the cash flow that my portfolio produces, and then I'm taking that cash flow and rolling it into assets that I don't care, that I don't look at, that I truly believe in. All right. And that was really, really important, because now I have a peace of mind. I know what I want. I learned my lesson. I've seen my portfolio go from like 10 million to 5 million in a matter of hours because of greed. All right. So understand that you need to have a plan. Go all in on one type of asset that you're committed to learning, right? And then don't chase high returns. Don't get greedy, right? Number 3, I got greedy. I was chasing high returns. All right. So number 4, failing to do your research, right? Before making any investment decisions, it's important to do your due diligence and research the investment thoroughly. This includes understanding the risk and potential rewards, as well as the track record of the investment and the company or fund behind it. Don't be swayed by hype or sensational headlines. For me, it was really understand when I decided to go all in on understanding the blockchain, I went all in on educating myself first. I hired mentors. I joined investment groups. I spent a lot of money just learning and understanding the landscape, right? Before I deployed any money, and I missed out on some great returns, but I wanted to focus on gathering the information and building my depth of knowledge so I can learn to fish for myself down the line. So that's why I was willing to hire mentors to teach me what to look for, to teach me how to analyze an ecosystem, to teach me how to deploy capital and how to build my own strategy and things like that. So don't fail to do your own research. I've put money into things and it's gone up and I didn't know why. Right. So then if you deploy money into something and you get a return and you don't understand why, you just gambled. You got lucky. Right. But if you do your research, you understand why you're doing it, and you deploy a little bit of capital in it and it goes up. Right. And you analyze why it went up and you start to understand, you're like, okay, cool. I can start identifying patterns. Right. I can start making more data-driven decisions. Right. So for me, when I'm looking at an ecosystem on the blockchain that I want to invest in, I'm looking at smart contracts, security protocols, liquidity, previous audits, community health, transaction volume, numbers of investors, and so much more. I have an entire checklist that I look at before I deploy our capital into an ecosystem, right? That follow principles that I've learned from just understanding and studying the blockchain and crypto over the years. All right. And the last one, number 5, is not being patient. All right. Investing requires patience, as it can take time for your investments to grow. All right. Avoid the temptation to make impulsive decisions based on short-term market fluctuation. Again, this goes back to mistake number 1, not having a clear plan. Because I didn't have a clear plan, I was trying to diversify. Because I didn't have a clear plan, I was chasing the next stock or the next coin that would do it 10 to 100x. Because I didn't have a clear plan, I was not doing my research and I was being impatient. So make sure you're patient and you understand what you need and give yourself enough time to actually see the return on the investment that you want. Over a long enough time horizon, most investments that you thoroughly research will actually pan out. So there you have it. That's my top 5 mistakes that I made early on as an investor. So avoid making these mistakes. Learn from my mistakes. My mistakes have cost me millions. So I hope you found these tips helpful. Thank you for watching and for listening. Depending on where you're at, like and subscribe. Leave me a review or comment below. And if you're considering investing in the blockchain, check out my free course, The Boring Money System, where I break down the basics of getting started with investing in the blockchain. Till next time, stay calm, print money, and enjoy life and business on your terms. Deuces. If you found this video helpful, chances are you're gonna find a ton of value in our Boring Money community, where I'm in there live, actively sharing articles, market updates, and just educating you on what's going on in the market real time. So if you don't want to wait for another one of these episodes or another video training to come out, and you want to have live updates on what's happening in the market, go ahead and join the Boring Money community, where you can have access to us and be able to ask any questions that you want, and potentially even get featured in an episode. Till next time, hope to see you on the inside.